Hello, young traders. Drfx here from Drfx, Swing Trading Mentoring. Gonna be taking a look as usual at some currency pairs that have shown some interesting movements, and some of which could provide us with trading opportunities in the days ahead, based on the patterns and signals that I'm seeing on the daily and forward charts of these currency pairs. Now, starting off with the Swiss francs, Japanese yen. This is possibly forming a large consolidation setup on the daily chart. So far, what we've seen here is a fairly volatile uptrend that struggled, and it eventually gave way to this sideways pattern in the form of the double top formation that has led to the start of this downtrend, and which has taken us to this outer uptrend line that was formed as part of this uptrend. So what I'm seeing here is the start of a downtrend that will be confirmed with the break of this outer uptrend line, and this could lead to the start of a movement that is part of an overall formation of a consolidation setup in the days and weeks ahead. So what we have here is these double top formation, double top signals, and double tops and double bottoms, as you know, are very common when it comes to the start of trend changes and movements in the opposite direction. So assuming that this trend is going to continue, we're going to see and wait until the market breaks this outer uptrend line with a strong signal that would indicate the continuation of this movement, and of course provide us with a potential trading opportunity to take advantage of this movement. So based on this previous volatile uptrend and the start of this downtrend, it is telling us that the market could potentially be forming a large consolidation setup. And what is going to be needed to at least confirm the start, or at least complete this bearish wave, is the break of this outer uptrend line, which essentially would continue the bearish momentum that was started by this double top formation. So what is possible is that whereas this uptrend started and was fairly volatile, taking its time to reach this area here with a rally and then a deep pullback, followed by another rally and sideways movement, and then a period of sideways movement before continuing. This bearish movement could be a little bit more aggressive because double tops in general lead to fast movements in general. So we could see the market continue this bearish movement towards the area here within a very short period of time, compared to the time that it took to start to complete this uptrend. Taking a closer look, you can see here that it's a fairly strong double top formation that was formed here. It led to the break of this inner uptrend line and the movement towards this outer uptrend line. So this is the first somewhat of a bearish signal following the break of this area here, because as you know, the break of this area here is very important to confirm that this is in fact a double top formation and not a consolidation setup. Because what you'll notice is that consolidations can be formed with similar patterns that also form double top formations. So what was possible is that instead of the market continuing lower here, it could have rallied and continued this movement as part of the formation of a consolidation. So the break of this area here, I think people call it the neckline, is key to confirm that this is in fact a double top formation and not part of the formation of a consolidation setup. So further confirmation would come in the form of a break of this uptrend line, which would also potentially provide us with a trading signal as part of the continued movement towards this support target here. So in summary, for this trade setup, for this currency pair, it's possibly forming a large consolidation setup on its daily chart. And the double top formation that we saw is the start of the movement to start a downtrend, And the break of the outer uptrend line is going to be needed to confirm the continuation of this downtrend and the potential formation of this consolidation setup. And in so doing, provide us with a potential trading opportunity to take advantage of this bearish momentum. Moving on to the US Japanese yen, which actually has somewhat of a similar setup to the Swiss franc Japanese yen. Here we see a much stronger and larger uptrend that was formed, and a potential start of a new downtrend that could lead to the formation of a large consolidation setup as well. So here we see that the market has formed a small pennant setup just below this uptrend line. So the break of this area here, we've already seen it break the support boundary a little bit, but it would need a further break, with a greater separation from the support boundary to confirm the start of this downtrend. So what you actually see here is actually somewhat of a bear crown, where this U-turn that took place that led to the break of this uptrend line and the formation of this area here would be considered to be the center tip, and this pennant would be considered to be the right tip. So it's one of those examples of a bear crown or head and shoulders pattern where the market doesn't really have a left tip. Well, you could actually consider this to be the left tip, but I usually consider, well, perhaps this one is also the left tip. But usually I look at the ones that are probably around this area here instead of this far down. But nevertheless, this could still be considered to be the left tip, or this area here, either of these two. And this would be the center tip, and this would be the right tip of the formation. So it's definitely indicating the start of a trend change. And this will be confirmed if we continue to see additional bearish movements in this direction as part of what appears to be the start of this downtrend. So this currency pair is also showing signs of the formation of a large consolidation setup. A small consolidation setup has been formed at the uptrend line, and a further break of this small pennant consolidation is going to be needed to confirm the start of the downtrend that will be part of the formation of a larger consolidation setup. Moving on to the US Swiss franc. This one has been in a wide range setup for quite some time. You'd recall that we had actually attempted to trade this with this bear candle, as it appeared to be headed back towards the support boundary, but stalled at this area here, requiring us to exit the trade at a small trading loss. So this is clearly an example of a consolidation that is not really well behaved, somewhat volatile, and so as you will see on the forward chart in a while, the movements that have been taking place over the last couple of days have not really been the type that provided us with a trading opportunity. Nevertheless, we are seeing here that the market has given us a bearish candlestick signal here, which could indicate the start of the movement back down to support. But as you see here, the market had also provided us with a previous bearish candle that didn't do much and actually led to the start of a sideways movement here. So this area in general is somewhat volatile and weak compared to the rest of the consolidation that had much stronger movements between resistance and support. So this could be what we call the August slowdown effect, where the market generally has a little bit of a lull in activity. Please don't judge my handwriting. So this could be the effect of the lower levels of liquidity that take place from time to time during the month of August. So this is why, especially when we take a look at the 4-hour chart, you can see that the market has in fact formed a pennant, but a lot of the movements and the signals have been a little volatile and risky to trade. And this area here I would consider this to be a weak support boundary, because of the large wicks that were formed at this area here. So whereas resistance had stronger candles here, these two areas that form support, I consider them to be weak because of these large wicks. And so trading this would have been a little bit risky. What happened here was that the market attempted a false breakout reversal to continue to head back towards support, but stalled midway and actually rallied. And what has taken place is that it has formed this double top formation with an ABC setup, this being the A, the B, and the C, followed by the break of this counter trend line. That has led to the movement back to support. But this candle, as you can see here, that broke the trend line, the counter trend line, was small, and the only strong signal that was given was the one that was given here, which was basically too late. It had already reached support, so it would not have provided much in terms of a trading opportunity. So this could be broken, this weak support boundary could be broken as the market heads towards the support boundary of the larger setup. And I wouldn't really consider to trade this breakout because it's a fairly large consolidation setup and a weak consolidation setup as well. So this currency pair has formed a range setup on the daily chart. Forward chart has formed a smaller but weak consolidation setup, and it is expected that the market could continue the bearish movement that has started with the daily candlestick signal, and that would have to be done with a break of the weak support boundary of the weak pennant setup on the forward chart. So this could be an example of the volatile and weak movements that have taken place over the last several days. Could be an example of the low liquidity that generally takes place in the month of August. So trading within this area here would have been risky because of the low levels of liquidity, at least for this currency pair. Moving on to the Euro US dollar. This one has formed a pennant setup on the daily chart, which was broken over the last couple of days. But instead of continuing the breakout with an additional bearish signal, we're now starting to see the market gradually U-turn and head back towards the support boundary, where it could potentially head back inside of the consolidation and head back towards the resistance boundary. So potentially we have a false breakout reversal setup that is gradually taking shape for this currency pair. And so we could see the market actually provide us with euro gains as it heads back inside of the consolidation and head back towards the resistance boundary. So this is actually one possibility. Another possibility is that instead of rallying, the market could actually be forming a small consolidation setup at this area here below this larger consolidation setup. So the reason I think that is possible is based on the nature of the bullish wave, the bullish pullback that has taken place. It's sort of slow, and it's very similar to one of the types of movements and types of trends that indicate the start of a consolidation setup. So I wouldn't be surprised if we actually see a strong U-turn here, bearish, that takes us towards this area here, and that leads to the formation of additional bullish and bearish waves to complete the formation of this consolidation. So this is another possibility in terms of what could take place on this currency pair. Either a false breakout reversal or the formation of a small consolidation setup. So basically, Euro US dollar could be forming a false breakout reversal setup that takes us back inside of the pennant setup on its daily chart. Also, instead of doing that, or before it does that, it could also be forming a small consolidation setup below the support boundary of that larger pennant setup. So a signal is going to be needed, bullish or bearish, to confirm either of these two scenarios. But what is also possible is that it could form the smaller consolidation setup and then head back inside of the larger consolidation setup. Finally, the Euro Japanese yen This one looks also to be forming a consolidation setup. This one actually provided a strong bearish momentum. It did so ahead of the other Japanese yen currencies that are also possibly forming a consolidation setup. So this one moved, this correlated currency pair moved ahead of the other Japanese yen pairs and took us all the way down to the support boundary. So what could be taking place is that we could see the market move after this brief period of sideways movement, start an uptrend that eventually takes us back towards this resistance point here, forms the second support, second resistance point somewhere in this region here, and then heads back towards the support boundary, which would have been formed with this second support point. So over the last couple of days, this currency pair has been moving sideways, and this could actually give way and be part of the formation of a larger consolidation setup. And this sideways movement could lead to the formation, or will need a bullish signal to indicate the start of an uptrend as part of the formation of this larger consolidation setup. So consolidation setups seems to be the common element throughout most of these currency pairs that we looked at today and that we've been looking at over the last several months. And it is definitely indicating that mastery of consolidation setups is gonna help us to identify a lot of trading opportunities in this currency market on a weekly and a monthly basis. So we're gonna be waiting on confirmation from these currency pairs in terms of the bullish and bearish signals that are needed to confirm the movements that could take place on these currency pairs. So let's wait to see what takes place over the next couple of days and look for a trading opportunity.